2 weeks ago, Wall Street was bracing for a perfect storm at SpaceX. The company was about to report earnings, and in the same week, nearly 1 billion insider shares were set to hit the market. Short sellers piled in with over $24 billion in bets, expecting the stock to get crushed. Instead, SpaceX ripped higher. So what actually happened, and what does it tell us about where this stock goes next? Quick recap for anyone who missed it. On June 12, 2026, SpaceX listed on the Nasdaq under the ticker SPCX. Priced its IPO at $135 a share, raised close to $75 billion, and became the largest IPO in stock market history. The stock opened at $150, and within 4 days, retail investors had pushed it all the way to $225.64. That briefly made SpaceX worth more than $2 trillion, putting its valuation above Amazon and Microsoft. By late July, the stock had fallen more than 50% from that peak, dropping below its original $135 IPO price. Anyone who bought near the top was sitting on serious losses. Was the crash over, or was something worse coming? Before the twist, here's what SpaceX actually represents. It's not just a rocket company anymore. It operates across 3 major areas: space, the core launch business, including Falcon 9 and Starship; connectivity, that's Starlink, the satellite internet network; and AI, after SpaceX acquired Elon Musk's company XAI earlier this year in a deal worth roughly $1.25 trillion combined. So when you buy SpaceX, you're buying exposure to space, satellite internet, and AI all at once. And that's exactly why the next few days mattered so much. Investors weren't just waiting on earnings, they were waiting to see if SpaceX could justify the valuation the market had given it. SpaceX scheduled its first-ever public earnings report for August 4th. 2 days later, on August 6th, a lockup expiration would release 911.5 million insider shares, worth roughly $116 billion at the time, onto the open market. That's more shares becoming available than were publicly trading before. A stock already down over 50% from its peak, plus a flood of new sellable shares, plus an earnings report that could go either way. Short sellers saw the setup and built up more than $24 billion in bets against the stock. That was more than the short bets against Tesla at the time. The logic was simple: weak earnings plus more supply equals more selling pressure. Almost everyone positioned for this event was betting the same way: SpaceX was going lower. If you want to understand what actually moves a stock, instead of just reacting to the headline, subscribe. I break this stuff down every week. Now here's what actually happened. On August 4th, SpaceX reported second quarter revenue of $7.81 billion, up 92% from a year earlier, and well above what analysts expected. The net loss narrowed sharply to $541 million, a massive improvement from the billions in losses the quarter before. But capital spending exploded to over $18 billion for the quarter, with most of that money pouring into AI infrastructure. The stock initially dropped about 8% as investors digested those enormous costs. At that point, the bearish setup still looked intact: a weak stock, a huge unlock coming, heavy spending, and short sellers waiting. Everything seemed lined up for another major move lower. Then August 6th arrived, the day everyone expected the selling to get worse. Instead, SpaceX went the other way, ripping higher and gaining double digits in a single session. Investors looked past the immediate selling pressure toward the bigger picture: revenue growing fast, a massive cash position, and proof that the company could absorb the insider selling without collapsing. That completely changed the way the market was interpreting the situation. That shift in psychology hit short sellers hard. When a heavily shorted stock suddenly reverses, those traders often have to buy shares just to close their positions, pushing the price up even further. That's called a short squeeze, and it appears to be exactly what happened here. As of this week, SpaceX is trading back around $133, nearly erasing the entire post-peak crash and sitting almost exactly at its original IPO price. But surviving one catalyst doesn't automatically make a stock a buy. Wall Street is more bullish than ever. 27 of 28 analysts rated a buy, with average price targets around $230 to $235, and Morgan Stanley alone at $300. The bull case is easy to understand. Revenue nearly doubled year over year. The company holds over $93 billion in cash, and it just absorbed one of the largest share unlocks in market history without collapsing. Those numbers give investors a strong reason to believe the long-term story is still intact. But the risk hasn't disappeared, it's just been pushed into the future. This was only the first tranche of insider shares, with more unlock waves scheduled through the rest of the year. And AI infrastructure spending keeps rising, which means investors will continue watching how quickly those enormous investments translate into actual revenue and profits. The bigger the spending gets, the more the company has to prove that those investments can eventually generate substantial returns. So the real question isn't, is SpaceX a good company? It's whether the potential upside is worth the volatility you'd be accepting. If you believe in the long-term combination of space, satellite internet, and AI, that volatility may be tolerable. If you need stability, or you're investing money you might need soon, this is still one of the most unpredictable large-cap stocks trading right now. So to recap, everyone expected SpaceX's earnings and its massive insider unlock to send the stock lower. Instead, stronger than expected revenue flipped the narrative, short sellers got squeezed, and the stock recovered back toward its IPO price. But more insider shares are still set to unlock through the rest of the year. And the real question now isn't whether SpaceX can survive one hard week, it's whether the growth can keep up with what the market's now pricing in. If this helped you understand what actually moved this stock, subscribe for more breakdowns like this every week. See you in the next one.